Hi, everyone. My name is Alex Dradia. I work for Century 21 out here in Bakersfield. I help people buy, sell, and invest in Kern County. And today we have a very special guest with us. Her name is Ashley Weaver. Ashley and I have worked for a very long time together in Kern County. And I really look up to this individual personally for many reasons, right? She has great work ethics. She has great work-life balance and actually has helped me a handful of times when I was in situations and I had no pointed directions or did not know where to go. So Ashley, I'm very, very thankful for that and all your support.
Hi, Alex. Thanks so much for having me today. It's a pleasure to be here.
Yeah, no, you bet. So thank you for taking time out of your busy, busy day. I truly appreciate everything you do and, hopping on and doing this with us. So tell us about yourself. I know you lend money and you like to give out money. So I kind of like call you Money Tree. So yeah, how long you've been lending and why lending and not a real estate agent, right? That's kind of, I'm kind of curious about that. I don't think I've ever asked you that question.
Yeah. So I've been in the business, and when I say business, in the real estate, lending / banking industry for, let's see, it's since 2005. Okay. 2005 is how far back we're going to go with my history here. Okay. So I started in banking, and I think that's the reason that I stayed in finance. Okay. Working for credit unions, and I got to a point where in my life where I started to have kiddos. So I have 2 babies, and when I stayed home with them for a couple of years, I decided, okay, I'm going to go back to the credit union life. And then I thought, well, let's just see what's out there. What else is there, in this industry? And so I found Karpe. Karpe Real Estate Services, said, hey, let's go ahead and get you licensed. We're a mortgage broker. So that's the difference between what I was used to and what I was getting into. Right. We got my real estate license, we got my NMLS license. And from there, I never looked back. I just kept going. And, I never got into real estate because finance was just something that I was good at. And smart people that I've talked to, just in my life, they've always said, find something you're really good at and stick to that one thing. Yeah. Real estate opens the door for so many possibilities. Yeah. But I felt like finance was just where I belonged. So I've stayed there.
So you just love numbers. Simple as that.
I do. Sometimes I have to step away, go home for the day and then come back, and they're still going to be there with fresh set of eyes, fresh, cup of coffee. Yeah. No,
I mean, genuinely for the number of deals that we've done, put together, and you closed all of them in timely manner. You are really, really passionate about lending, because I've come to you with the scenario, and whether it's 8 o'clock in the morning or 6 o'clock at night, you can give me and my clients multiple options that worked in their best interest and allowed us to close the files. So, I mean, I know you're very, very passionate. That's coming firsthand. So what do you love about being the lender? Like, what do you love the most besides I love numbers?
Well, see, I don't really love numbers, but I love people. Okay. And I think that's the gap that I've always wanted to strive to, to kind of bridge that gap there is I feel like a lot of times people with their lender, people with their mortgage company, you always hear, how'd that transaction go? And they talk about communication. I didn't really get communication with my loan officer, or they said, people will ask, where are you in your home loan process? And they're like, I don't know, like I haven't heard from my lender and things like that. So for me, I really wanted to make sure that communication in my business was top notch.
So let me ask you a question just on that, right? So what does communication look like when I come and sit down with you and apply for a home loan? For people that don't know, I mean, I know, but what people that don't know?
I think that people sit down with me and they're fearful. They have so much fear and anxiety about making one of the biggest purchases they're ever going to make in their life. Yeah. So many unknowns. And I feel like the whole point in sitting down and talking with me is I hope that at the end of it, they feel a little more comfortable with this process and a little more excited versus anxious about where they're going.
Got it. Yeah, no, I think you do a great job on that. I think your ability to walk people through the numbers and putting a plan in place is crucial and is very helpful. So,
yeah, I think so. Real quick, when you say a plan in place,
yeah,
that's also it too, because in reality, everything I just said sounds good, but it's not always good news, right?
no,
Like, I hope they feel less anxious and less fearful when they leave. But the reality of it is when you come and sit down with the lender, you're not always going to be told, yes, you're approved, go out, find a home, and hey, happy days, right?
unless it's 2000.
Sometimes, exactly, yeah. So, sometimes people are going to get the, hey, guess what? We have homework to do.
Right.
We have some things to work on. But at least when they leave, that again, part of the communication is saying, why is your credit not up to par? What's on there? How do we get it there? How much time do we think it's going to take to get that? All of those things are things that we can discuss and talk about, where at the end, the buyer feels more comfortable. And even though it wasn't a yes right now, it's a, hey, this is exactly what we need to do to get there.
Got it. Yeah, no, it's so important, right? And then keeping in touch with them throughout the procce. I think is
absolutely
just as important as well. So what are you seeing in the marketplace on the lending side, right? What is your opinion on how things are going? Where do you think they're headed? And yeah, I mean, what are your thoughts?
So where are we and where are we headed?
Yeah.
Let's break that up for a minute.
Let's get your crystal ball.
Yeah. So crystal ball comes in for the second question that you asked me, but let's focus on the first part. Right. Okay. The first part you asked me is, where are we right now? Yeah. So if we take a look at lending previously, COVID time, right? Yeah. During COVID, a lot of loan products came off the market. Yeah. Okay. We did not have bank statement programs for your buyers who are self-employed. We didn't have, lending really tightened up. So even though interest rates were, better during the COVID time, we lost a lot of the loan products that could really cater to these buyers to help them get qualified. Yeah. So now, where are we? So since that time frame, these loan products have come back. We now have multiple options to help a buyer get qualified and into a home. What
are your top three? I don't know if, sorry, go ahead and answer that second question and then I'll ask you the following up.
Well, the second part of it is saying crystal ball, right?
Yeah.
Where are we going? Where are we going from here? Yeah. We saw this year, we saw an increase in interest rates. They increased way faster than anyone predicted or thought that they would. Yeah. But what people have to remember, this is considered a normal market. So it's not one we have to fear. It's just one that we have to be smart about to make sure that the buyers are highly qualified when they're out making offers and they are aware of where we are with interest rates. Yeah, I think that's key to this type of market, is just really educating the borrower so they understand where they are.
Yeah, no, I agree. It is very important because I think they're very nervous right now and they feel like 08 is going to repeat itself. So they're very hesitant to pull the trigger or move forward with the transaction. So I think, showing numbers, showing data and walking them through the process kind of calms down, puts them at ease so they can proceed.
Yeah. And let's touch on that real quick. When you talk about the past and, 2008, when everything went a little bit crazy and people think that's going to repeat itself.
A little bit.
I feel like back then loans were a big part of the recession that happened previously. Right. We have not been lending as we were just talking about back in the COVID time, loan products went away. We didn't have as many options. We weren't putting people into homes that were in these crazy adjustable rate, mortgages where now they're going to adjust and not be able to afford the home. They're in lower interest rate market or lower interest rate home loans. So the payment is lower. So hopefully they can keep them. So when people talk about the market going into a recession right now, we have to remember that the market is always going to adjust and correct itself. But I think that's the better word choice. It's not a market recession, but a little market correction.
Yeah. No, I absolutely agree. I keep a close eye on the trends, and I am still seeing about 150 to 165 homes closing escrow every week. So the houses are still moving. People are still buying, but the number of houses hitting the market have gone up significantly. So there's just a lot more choices, and rates have gone up. So number of days on the market has gone from 2 hours to 26 days now. So I think it just takes time for us agents and lender to adjust to the new norms, and even the consumer to see, hey, this is the new norm. This is the reality. Everything that happened a couple of years ago was just fantasy land. And if you took advantage in that time frame, you lucked out, and it's home run. So that's the way I look at it. So I wrote down this question while you were talking. Top 2 or 3 favorite loan products.
Are we talking traditional or non-traditional?
Well, we're going to touch on non-traditional. So let's just say traditional for.
Keep it traditional.
Yeah. Yes. Just so we don't confuse our audience.
Okay. Very good. My top favorite. Let's see. Honestly, I like knowledge. So let me start. The 2 that come to my mind are the bank statement program and the DSCR rental investor program. And why those are my favorite is because, well, I guess that's non-traditional. So if you want to keep it, so put that aside. We'll go backwards and say, we'll save those for later. But if we're talking traditional, traditional loans are conventional and FHA. And they're both really great loans because they cater to 2 different types of buyers.
Okay.
People with maybe a little lower credit score with not so much money available to them to invest in this property. There's options for them. There's down payment assistance programs. Conventional is beautiful for the buyer that does have a little bit of money to put down with a better credit score. It really helps adjust the loan to fit the needs of the person in front of you.
Which product of those 2 provide or offers a better interest rate, or is that too broad of a question?
That's kind of a broad question. Typically rule of thumb is FHA's interest rates are a little bit lower than conventional. Okay. I could go off on a tangent on that one, but we'll just stick with that.
Okay, let's not go on a tangent. Yeah. So if you were to invent a loan product, whether it's traditional or non-traditional, and so what would that loan product be? Like, I think of idea, man, if I could do this way, it would be so much perfect. But of course, it's never works that way. So yeah, if you were to come up with a scenario, what would that be?
I really like the outline of conventional financing.
Okay.
I think it's more guidelines just because it's not just black and white, which loan product for me. The knowledge that I have on the backside on what they're looking for, the underwriting guidelines, that's what I would adjust a little bit.
Got it. Okay. That makes sense. So now let's talk about the non-traditional loan products. I think that's your favorite, right? I mean, look at that smile. So tell us more.
I mean, it's just fun to get really creative with it, right? Everyone can do conventional financing, FHA financing, VA, but these products kind of, they stand apart because some buyers that are self-employed or some buyers who are picking up rental properties because they're trying to build a portfolio to really help, their income and whole financial strength.
Right.
The traditional loans they're not set up for some of that. So let's start with the bank statement program. I mean, a program where a self-employed borrower doesn't have to show tax returns. They get to show their actual income on their bank statements and use that to help qualify them for the home that they want. I mean, that makes sense, right? Because the money is coming in, it's going into the bank account. So let's use it,
Yeah, they just don't like paying taxes. I think that's
They don't like paying taxes.
just put it out there, right? I mean, nobody likes Uncle Sam. I mean,
no, but see, I'm not the IRS. I'm just the one trying to help you get into a home.
Right. Yeah, so I don't blame you. Okay, so bank statement. Okay,
Mhm.
that's one. What's the other one?
And then, the DSCR is a rental investor program. And I like that one because, I mean, here in Kern County, we're a big investment,
Oh,
county.
yeah.
So having a loan where you don't need all of the income documents, the bank statements, the tax returns, and all of that just to purchase an income producing property, this program allows an investor to pick it up utilizing the rental income on the property. And that has been a pretty popular loan product over this past year.
Got it. Okay. What are some of the terms on DSCR loan?
Some of the terms of it. So down payment. Okay. With the DSCR program, you've got to have a down payment. You're looking from anywhere, I would say 25 to 35% down, just depending on, the whole package, your credit score, how much assets you have in reserves, things like that.
Okay. All right. 25 to 30% down. Are you looking at credit score also on that one, or no, it doesn't play that much of a factor?
Yes. So credit score does play a factor on the DSCR program.
Got it. Okay. So what about hard money? I know you do a lot of that. I don't know if you can talk about it or not. I think that's a great product. What are your thoughts?
Hard money.
People that don't know what hard money is, why don't you explain that?
So hard money is an equity-based loan, meaning you have to have a significant down payment. All right. And we're talking about investor only. Hard money does do owner occupied, but let's set that aside because that's not what I'm speaking of right now. Hard money on the investment side is stated income.
Okay.
We don't have to source where the funds are coming from. So on the traditional side, we need bank statements. We have to see where this money is coming from. On the hard money side, those, underwriting conditions go out the door. Hard money is funded by personal investors. And that's the reason that we do not have the strict guidelines that are in place by Fannie and Freddie Mac and even the big banks out there that are doing portfolio loans.
So let's say I'm an investor or somebody that flips home and $100,000, there's a property for sale. I call you. I need to close in 10 days. How much money do I need to come in with?
So you would come in with, you want to close in how many days?
10 days.
10 days. I would say a 25% down payment.
Okay.
That would do it for you. And then, a 10-day close would be easy on that.
Got it. Yeah. So all the flippers and all the investors, 25% down, you close in 10 days. And as long as the property's there, it's plug and play.
Stated income, no assets required. Yeah.
And it doesn't matter where the money comes from. It could be hiding under a mattress or a bank account or multiple accounts.
You make me sweat when you talk about like hiding under the mattress or.
Hey, I mean, haven't we ran into that scenario before where they were like, hey, Alex, we just keep all our cash in our house.
Yeah. Oh, that's common. Very common.
Yeah. So,
but there's ways to work around that on the traditional side.
Okay.
Because money, you have to remember, cash is not king anymore, guys. You have to put your money in the banks. Yeah. We have to source it. We're not talking about hard money anymore. I think we moved back to conventional on that part. Yeah. But yeah, we have to get that money into the bank.
Yeah. No, I think that's such a great product, right? Because if you're trying to close early and if there's a great deal and you're an investor and you need to pick it up, and you can always refi out of it later. So I think that's a great option. And I don't know a lot of people that offer that also. So that's something very cool.
So just quick on hard money. Hard money is beneficial because we can do investment properties and owner occupied. So if you have borrowers with an ITIN,
okay,
so they don't have a social security number, then they can still do hard money financing. Just remember the down payment comes into play. They have to have enough for the down payment. So ITIN, if someone's looking to build a property and they want to purchase land is really popular with hard money financing.
Wow.
Mobile homes that are on a permanent foundation can go hard money.
Okay.
So those are just some of the extra little things that hard money you can utilize hard money for.
Okay. That makes more sense. Yeah, mobile home is a touchy one. A lot of people kind of walk away from it. So yeah, I'm glad you put that out there. So I have a very what is the relationship between down payment and your monthly mortgage payment? How much difference does it make for me to come down, bringing in a larger down sum than bringing in the minimum?
What are you asking payment wise?
Does it make, if I bring in, instead of bringing 20%, if I bring in 25%, does that make a significant difference on my payment, or I'm better off with bringing in 20% only?
So if holding on and having a little bit of cushion in the bank is important to the borrower, then definitely hold on to it. So for every $1,000 that you put down, you change your payment roughly about $10 on that monthly payment. So dumping thousands of dollars into the deal does not change your monthly payment by much.
Got it. So $10,000 would hover around $100 in your monthly payment.
Yes.
Got it. That was okay. So now, earlier you said you're a broker or Karpe is a broker. I think you're a broker as well. So what's the difference, right? For people that don't know, difference between a broker and a traditional banking institution. What does that really mean?
Okay, so I like to use boxes when we talk about this. So imagine if you went to a retail branch, that'll be your credit unions, your large banks.
Okay.
When you go in to qualify with them, you can leave and they'll tell you yes or no.
Yeah.
Whether you're qualified based on one box. Okay. Like they have one box of guidelines. If you do not fit in that one box, there's no gray area. If you go to a mortgage broker,
like yourself,
like myself,
okay,
you put together the loan,
okay,
and it's not one box. There's multiple boxes. So if you don't qualify over here, maybe the gray area is because your tax returns don't show enough income and you need to do a bank statement program. Well, guess what? We have a program for bank statement program. Whereas if you went to a retail branch, they may not have that product. Multiple down payment assistance programs. Okay. Some retail branches can't offer the ones that mortgage brokers can offer. So that's the biggest difference. And the one that really sets home with people is the fact that, you can come to see me, a mortgage broker. We're only going to run your credit one time. Okay. We're not going to run it multiple times. Like if you want to look at this product or that product, it's not like a car dealership where you have to run credit several times. It's one time, and then we can place it wherever it needs to go.
Well, that's nice. Yeah, I thought you would have to run it multiple times to get multiple different quotes. Mm-hmm. So you don't have to run that multiple times.
Do not have to do that here.
Okay, very nice. So my other question is, what is the loan estimate and why is it important? I mean, people don't know what a loan estimate is, right? So can you touch on that a little bit?
So when they came out with the loan estimate, it's a really great form because it breaks your entire loan down.
Okay.
The first page of a loan estimate is going to tell you how much you're financing,
okay, what
your interest rate is. And a really important part is at the top right, it's going to tell you whether your loan interest rate is locked or not locked.
Okay.
When you move down to the second page, it's going to break your closing costs down for you.
Okay.
So that's where you're going to compare apples to apples. If you're someone that's out there shopping for a mortgage, you want that loan estimate provided to you, because on page 2, it's going to show you where, this lender may be charging you X amount of points.
Yeah. Right.
And the other lender is only charging you this many points. So that's the page you can really look at the fees and compare them.
Got it. Where can one get an estimate?
So any mortgage lender that you're working with is required to provide you with a loan estimate.
Got it.
So yeah, we can work one up. No problem.
Got it. And there's no fee or consultation charge or anything of that nature, right?
There shouldn't be.
Okay. So let me ask you this. So let's say I'm in a 30-year mortgage. What are some tips on if I want to pay it off sooner? Is there a way to do that? Or just being more creative, right? And I want to pay my house off maybe 5 or 7 years sooner. How do you think one should tackle that?
Yeah, so a lot of people put themselves in the situation where they want to do a full 30-year mortgage because when life happens, right, you don't want to be stuck with a 15-year mortgage payment.
Right.
When you have a moment and you need to pay that lower payment amount.
Yeah.
But think about it, you know, if you have extra money and you want to put it down on a principal payment, you can do that. So, you know, if you want to structure yourself, you can always call me and we can sit down and we can work an amortization schedule for you where I can actually put you on a plan. If you tell me, Ashley, it's important to me to be on a 15-year plan, even though I'm doing a 30-year mortgage, or a 10-year plan, or even a 20-year plan, whatever it is, we can amortize that out for you and show you what you should make your payments out to be so that you can try and stay focused. I feel like sometimes when people say, oh, just make extra payments, make an extra payment every month. Well, that's great, but sometimes people get off course with that.
Yeah.
So people who sit down and actually let me amortize that payment out for them for whatever goal they're trying to achieve, it's more helpful to see what that actual payment would look like to them so they can just plan on making that payment.
Got it. So get a 30-year mortgage, work up the numbers for 20 or 25 or a 15-year, whatever you want to do, and make those payments consistently. So when life do happen, you can go back to regular payment and then go back to the other payment to pay it off sooner.
Yeah, I would say absolutely, unless you're someone who has just fully committed to a 15 or a 20-year and that's what you want. Great.
Yeah. For all the Dave Ramsey fans out there.
Yeah.
Exactly. So, you know, and this is a big question right here. I think it's going to come up a lot now. When does it make sense for someone to refinance their home loan, right? Because everyone's locking in this higher interest rate, 6-7%. When does it make sense besides it's just dropping to 7% or 6%? What would be the right advice on that?
So I'm really glad that you brought that question up because what happens when somebody gets a mortgage is the deed that's publicly recorded is sent out for telemarketers to send them, you know, a bunch of junk mail. And you're gonna, as a home buyer, you're gonna obtain a mortgage that is a certain interest rate. Okay. And when you start to receive all this mail that says refinance now, it's really important that you contact your loan officer and ask questions before you respond to those flyers, because a refinance comes at a cost. Okay. It's not free. You're going to pay your title and escrow fees again. You're going to have to start the new mortgage with impounds. So your property taxes and insurance have to get recollected. And you really want to make sure that it's the right time for the interest rate not only to be less, but that your loan to value in the property is the right time. Because if you've purchased a home with less than 20% down, you will most likely have mortgage insurance, the PMI. So the goal when you refinance is to be able to remove the mortgage insurance, lower the interest rate, and keep everything, you know, all the fees and everything very low. If you start refinancing just because you see, you know, a 0.5 or a 1% difference in your interest rate, you're going to have to refinance again later if your mortgage insurance isn't off. And that means double fees. So are you really saving at that point? Because your break-even period, when you add up those fees, can cost you quite a bit of money.
Yeah. So, you know, you said ask your lender questions when you get this mail. What would be a good question to ask?
So a lot of times my clients will send me a picture. They'll send me a picture of the notice that they got in the mail. And they'll say, hey, I'm getting these letters. Is it time to refinance?
Okay.
And then I can let them know, you know, yes, it's a good time, or, you know, no, put those aside. We're not quite there yet. Yeah. So it's definitely something that, you know, you can watch the interest rates, listen to what's going on. But, you know, if you really have that good reputation or relationship with your client, then, me as a lender, I want to stay in contact with everyone and let them know where we are. Tell them you're going to get notices, sit tight, we're not quite there, or yes, we are, let's look at this.
Right. Yeah. Go from there. Okay.
And I think too, when we talk about loan products, this just popped into my mind, so I was going to add it in there.
Yeah.
Some people are doing the buy downs.
Yeah.
So if someone is doing a buy down on the loan, that means that the seller is paying for the buyer to have a discounted interest rate for the first few years on the loan.
Yeah.
So why would you want to, refinance at that time if you have that lower interest rate?
Already.
You really want to wait for the rates to be significantly different before you make that decision.
Yeah. No, great advice on that. Yeah, I agree. I mean, people ask me, is it a good idea to refinance 30-day or 60-day later? And I'm like, well, it all boils down to the numbers, right? Does the numbers make sense at the end of the day? That's what's important. So, we're running out of time here. So I just want to ask you a couple of things. If you were to give an advice to a next buyer that's looking to purchase, or an agent that's looking to get into the business, or a lender that's looking to get into the business in current time and condition, what would that one advice be? Just one.
Just what, but it's one for everyone.
Yeah.
Have a sit down face-to-face meeting. If you're a buyer, sit down with the realtor and the lender together. If you're a realtor, sit down with another realtor. If you're a lender, sit down with another lender in the business.
Yeah.
Because with the past few years where we've had so much Zoom and so much, digital, there's very little interaction anymore. And when you get that opportunity to sit down and talk to someone face to face, you get more information. And I don't know, I just feel like, we'll talk about my buyers for a minute. When they come in and they just do an online application, it's all digital, it's just not the same as when they come in and sit down and we go over numbers together, and you get to see it and you get to look at it in person and ask all your questions. It flows so much better. So I would say my advice to anyone is to sit down and have a conversation face to face.
I think that's a great advice, and just make sure you get all your concerns addressed, whether you're looking to get into the business or you're looking to buy a house, whatever that case may be. Just make sure, get face to face and have that concerns addressed. So Ashley, thank you for your time. If somebody wants to get a hold of you, how do they do that? And just give us that phone number and see how we can get a hold of you.
Yeah, thanks for having me, Alex. So I'm Ashley Weaver with San Joaquin Valley Mortgage. My best contact number you can call or text is 661-809-6508. And you can also search me on social media if you look up the hashtag funded by Weaver.
Awesome. I'll make sure I put that into the description. All right, Weaver. Hey, thank you for your time. I appreciate it. And we'll talk soon.
Bye.